Himanshu Srivastava, he is the Senior Research Analyst at Morningstar Advisors. He joins us on the show right now. Himanshu, hi, afternoon. We're halfway past 2017. What's your thought on the FII, FPI flow so far into Indian equities?
So the FIIs have been, the flows from FIIs have been really robust for this year. So if you see from Jan to June, they have pumped in somewhere around 8 billion USD so far, which is a pretty robust number. However, if you break it down a bit, most of them or majority of it came in the month of March when we saw a net inflow of 5 billion USD. That said, the flow on a month-on-month basis, though they have slowed down, but it's not bad either. So a 500 or 600 million USD every month is a good number, and we should be happy with that. And I see this trend going forward. I don't see any dramatic change to this trend at this point in time. Coming to, if you compare this year's flow with the last 5 years, the first 6 months, we had the third highest net flows for a year. The highest being 14 billion USD, that was in 2013, and the second highest was 9 billion USD, which was in 2014. So overall, it's a good number. Maybe not the best in the last few years, but not bad either.
Right. So you've mentioned that the net inflow slowed down in the month of June. Was that expected, and if so, what were the possible reasons behind that? Because right now we are staring at a market which is almost counting down at 10,000 Nifty.
Right. So the flows, what I expected was that I expected FIs to continue pumping in money into the Indian markets. But the amount of slowdown, the quantum of slowdown was not expected by me as well. I expected a flow of somewhere around 600 or 700 million USD every month on month. But in the month of April and in the month of June, the flows have been really slow or low as per my expectation. And the reasons for that are not something that very far to, you cannot fathom that. One of the things is GST has been implemented, but there are few short-term hiccups which I think FI will be really looking at before putting more money into the markets. The other area of concern which is at present for FIs is the economic growth. We have not seen the kind of growth that was expected earlier. And this rally the kind of flow that we have seen in the past is largely driven by the expectation that the government will bring in more reforms, which is happening, but that is not really translating into the growth in the economy. So that is one area where I think FIs are holding on to their investment into the Indian markets at this point in time. Having said that, I think the things are getting more clearer, and maybe in some time we will have a more clear picture as to whether this trend is sort of headed. As of now, I am still positive that we will have a good flow. Barring few intermediate hiccups, the flow should be good and in the positive terrain at this point in time.
Hi, Himanshu, this is Nantara joining in from the Delhi studio. I know you just told us why we perhaps saw the reduction in the inflows, but in light of Janet Yellen's testimony yesterday, we did see the US markets also reach record highs. How big a concern is that? Do we have to be scared about outflows?
The outflows can happen in the Indian markets provided if there are more rate hikes happening in the US Fed. That is one area where there could be something concerning about the flows coming into Indian markets. The other thing is that we have to look from a perspective that for India, for FIs is an investment destination. It's an investment avenue, and they are consistent, always comparing India with other emerging markets. So India has to stand out with regards to risk reward profile to have more money from FIs coming into Indian markets. So I think from that perspective, there will always be some risk, but as long as our fundamentals are strong, we are standing on a solid ground at this point in time. But yeah, the economic growth has to come back, or at least there should be a signs of it, so that we can have more conviction, or FIs can have more conviction on the Indian markets. If that is not happening, then yes, there could be some outflow that we can see in the coming months.
And with our markets also reaching record highs, etc., what kind of investment patterns are you expecting going forward?
So if you check I have checked the portfolio of India focused offshore funds and ETFs, and their investment pattern is sort of in line with what is being expected. So they have investment in financial services and consumer cyclical sectors. These are the sectors which stands to benefit from economic turnaround or fall in interest rate cycle. And there are also sectors which are related to urban pickup in urban consumption demand. So financial services, consumer cyclical sector, and within cyclical they are into auto and auto ancillary. So these are some of the sectors that they are really expanding their exposure. The other sector that they are looking at is basic materials, wherein they are looking at cement sector as well as metals, again related to consumer cyclicals and uptick in the demand or growth in the economy. The sectors that they are avoiding currently is those sectors where they are seeing a bit of headwind, largely IT sector or pharma sector, and for that matter consumer communication services or telecom sector. Consumer defensive is another sector that they are holding in their portfolio, largely from the defensive perspective, to give a defensive tilt to their portfolios, which is the 5th largest sector in their holding. Interestingly, the allocation or the investment pattern that they are following is in line with what we are seeing from the Indian fund managers in the mutual fund industry. So they are sort of in tandem with each other, not really drifting apart. So I think they have sort of the same opinion on the growth prospects of the Indian economy, and that is what we have been observing of late.
Okay, Himanshu, great speaking with you. Thanks much for taking the time out and sharing with us your perspective on how the FPI flows have been panning out and the take on the markets. In the meantime, India's oldest mutual fund house, that's UTI AMC, is all set to tap the markets with a big bang